With the management of KPIT Technologies, Mr. Ravi Pandit, Chairman and Group CEO, joins us to analyze their numbers. Mr. Pandit, it's great to have you on the show. Thanks very much for joining us. I think the market has given its verdict. Q4 has been a good closing quarter for FY18. How broad-based was the growth and how optimistic you are of repeating this performance in FY19?
Yeah, so the growth was quite broad-based. We grew in our engineering services, we grew in digital services, we grew in our products area. We also grew across the geographies. And it has been a good growth here, very satisfying for us. As far as the next year is concerned, we are guiding for about 8 to 10%, which I think we should be able to make it because I think the sectors in which we are and the offerings that we have are good to give us decent growth.
A quarter ago when I met IT companies, your peers, the big IT, the big four, the sense which I got from them along with the Q3 numbers was Mamla dhila hai, okay hai, challenges are there, but suddenly in 3 months the outlook is looking up, the commentary has picked up and the tone is very positive. What has changed?
Well, I think I can speak for ourselves. In our case, we are working in those areas which are highly focused, which are highly knowledge intensive, and that's the reason why we have seen growth and we expect to see growth going forward. I think as far as general industry is concerned, the general tone, you're right, is getting positive because the overall IT expenditure is also picking up globally. Our focus has been on the markets where we have some strengths. So our growth has been in China, in Japan. We have had decent growth in Europe, and these are the areas which have picked up for us. As you would know, almost 40% of our revenues come from the automotive sector, which is driven by a lot of new technologies, and that is giving us good leverage.
When you say you're guiding for 8 to 10% growth, I'm assuming that this is the constant currency growth, right? This is not the dollar growth.
That is true. That's true.
Can you also indicate to me that how much of your business you would like to classify as the digital business and how much of your business is still the old business which is not growing and you are looking at either reducing it or you are looking at not growing that business?
Okay, so if you have to look at our overall offering portfolio, there is clearly an engineering business which is kind of different. Of the remaining, and that's about 35% or so, of the remaining 65%, almost 50% is digital. We look at the work that we do in the both in the ERP domain as well as outside the ERP domain, which is focused on digital, that is digital, which is almost 50%. And that has been growing quite well. And that has been a driver of growth. Even within ERPs, I think there is a time for inflection now. And we believe that some of the ERPs will pick up because they are coming up with newer technologies.
Yeah, EBITDA margins, it is at about 13.5%, 13.3 to be specific. With your focus on new age businesses, is there scope for your margins to stay above 15%? Can it move to 15, 15.5% in FY19?
So if you were to look at last year, when we closed the year, our EBITDA margins without considering the unusual expenses that we were having because of the transaction, etc., were about 12.7%. And the reported, after considering all these expenses, about 11.5%. And we are guiding about 12.5% or so for the next year. I think we should be in that ballpark.
That is assuming at what rate the rupee moves, because that is the variable factor which we have to be mindful of.
Yes, but that's an area where you don't venture to make predictions, right? So we are assuming kind of somewhat stable.
And does this include any kind of a wage hike which you could consider in FY19?
Yeah, there would be some wage hike, obviously. We don't have a clear number as yet, but that's a decision to which we will come within the next month or so.
Okay. Your dollar revenue FY19 growth, you're forecasting to be between 8 to 10%, and EBITDA margins between 11.5% to 12.5%. I think the market would be very excited about that. What is the risk to that target not being met? What are the challenges right now that can derail that growth or that target?
I think we have been reasonably conservative about the growth numbers. I believe we should be able to make those numbers. We don't perceive any significant growth, any significant risk to that.
To ask you a very simple question just for the benefit of our viewers, this entire deal with Birlasoft,
Yes.
How will that pan out in FY19 and what will that change to your aggregate margin and market positioning?
Okay. So, we expect, as our investor update says, we are in the whole regulatory process. We expect the process to be over by the end of this financial year. So, during the year, we will be more or less where we are. And after the whole process is over, as you know, we will be two separate companies. One which is focused on the engineering services, specifically for the automotive industry, and the other on the general IT area. I believe that both the companies will be strong in their domains. But you would not see much impact of that during this year.
Right. The reason I was asking you, Mr. Pandit, about whether or not you can meet your targets on growth and margins for FY19 is primarily because of the environment on pricing, both in the US and Europe. Is there scope for further improvement?
I believe that the improvement in pricing can only happen with better and higher quality services. But in a normal situation, I don't expect to see much change.
What about the average deal sizes? How much do you see those changing by in the coming year? Do you believe client budgets would expand?
Yes. So, if you look at average deal sizes, we are seeing a growing trend in the digital business, which has been a good growth area for us. And there the deal sizes have changed over the last year and a half. And we expect to see that growth happen in the coming years as well. As regards the ERP domain, the sizes are between 10 to 15 million, and we would not expect to see any major change. On the engineering side, a lot of the work that we do is of a long-term nature, and there also, if you look at our engineering area, we are largely in automotive. And we are seeing a lot of traction in electric vehicles. We are seeing a lot of traction in autonomous cars. We are seeing a lot of traction in connectivity. These are the areas where we see good growth. And as you would have noticed, even during this year, our engineering growth, business growth has shown a good trend.
Appreciate your time. Thank you for joining us, Manas. Let's